Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
As we await more numbers, let me toss it across to Karan or Rani. Karan, anything in the numbers so far? Any surprises?
No major surprises. Basically, it's about a 0.7% beat on the revenue front. We were expecting close to about 1% kind of dollar revenue growth and 2.2% constant currency growth. So numbers look largely in line. It's lower than our profit estimates by about 4.5%, 5%. We need to wait and watch details on that. Probably maybe because of a margin dip. And they haven't even revised the margin guidance upwards despite the depreciation of rupee. So certainly margin pressures exist, for Infosys versus TCS.
Okay. In fact, let me now go back to Kritika. Kritika?
Hi, Rima. Okay, so a little bit of color over here. Digital revenues have come in at $803 million. So that's about 28.4% of total revenues. So that's a sequential growth, I estimate, of about 8% and a year-on-year growth of about 25.6% in constant currency terms. Now, margins, as you had already said, 23.7%. Large deal wins across have crossed $1 billion in this quarter alone, which is almost 40% of this $1 billion is coming from financial services. So this is some color in terms of the details. A $100 million client has increased sequentially by 4 to 24. Utilization is at an all-time high of 25.7%. The ROE has then increased to 25.5% as compared to 24.1%. So this is just some fine print in terms of the numbers. I'm going through it bit by bit. And free cash flow is up sequentially by about 32.1%. A couple of important points as far as the court plates are also concerned. Salil Parekh, the CEO of the company, says that the strong revenue and margin performance in this quarter shows that a dual emphasis on agile, digital and AI-driven core services is resonating with our clients. With our agile digital business growing sequentially at 8% and increase in our large deal wins to over $1 billion, we see good traction in the market. Rima, I think you'll have the exact figure of how they had performed last quarter. It was about $954 million, if I'm correct. UP Praveen Rao has also said that the utilization is encouraging and they are increasing their emphasis on the large clients of the $100 million plus clients. And MD Ranganath has emphasized on the importance of financial services. Rima, I'm trying to get the exact breakup of how financial services has performed.
Do you have the constant currency growth number?
Go ahead, Rima.
Do you have the constant currency number?
No, Rima, I'm still going through the press release right now, the one. Yeah, Rima, I have the constant currency growth number at this point. Give me a second. This is just taking some time to load. I'll toss it back to our guest right now. Karan, a quick comment on the digital revenues and how they have performed this time versus TCS's figures.
So digital revenues, there is a slight amount of disappointment because TCS, if you see, consistently has been growing digital by about 40% plus in the last 3 quarters, and Infosys comparatively 28% digital revenue growth is also not extremely good. So clearly you're seeing, there are reasons as to why Infosys is trading at such a steep discount versus TCS. In fact, this is one of the historically high discounts of Infy versus TCS, and primarily that's because of 3 reasons. One is the growth not being high enough. They are below industry averages, and secondly, not able to catch up on the margins. And one of the reasons for the growth not being as high is basically not this good performance through digital which is happening.
Okay, Karan, we have the constant currency figure. It's a sequential growth in the first quarter of 2.3%. So on a constant currency Q-on-Q basis, it's a growth of 2.3%. And on a year-on-year basis, it's 6.1%. Karan, your thoughts on the 2.3% constant currency revenue growth for this quarter?
So the growth, as I said, is just in line with our estimates for Q1. For Infosys, if you see, we expect the H2 FY19 to be slightly stronger, because if you see in terms of the constant currency CQGR for H1 FY18, the base was relatively very low. They grew only about 0.7%. So we do expect a better performance, by Infosys in the H2 FY19, and that will get them closer towards the higher end of the guidance band of 6 to 8%.
Okay. Let me just do a quick recap of the numbers for the benefit of our viewers. The dollar revenue growth has come in at 0.9%, slightly lower than the 1.5% that we were anticipating. In constant currency, it's a growth of 2.3%, which is again lower than the 2.7% that the poll threw up. Also, if you compare it to TCS, TCS had a constant currency growth of 4.1%. So on the revenue front for Q1, it's slightly lower than expectations. Also, if you look at the constant currency growth on a year-on-year basis, it stands at 6%, which is at the lower end of the company's guided band of 6 to 8%. And remember, Q1 is your seasonally strong quarter. So ideally, you would have liked a stronger start to the year to be comfortable with the guidance. So right now, the company is tracking at the lower end of its own guided band at 6% versus the margin guidance band of 6 to 8%. Margins have come in line with expectations, 23.7%. Profits have come in lower than expectations. With respect to the guidance, they maintain their constant currency guidance of 6 to 8%. But given that Q1's revenue growth has slightly been softer than expectations, will the street still like to tweak their revenue estimates? That is something we will watch out. Margin guidance has been maintained at 22 to 24%. On digital, their growth, while it contributes about 28.4% to their overall revenues, on a year-on-year basis, the digital revenue growth stands at 25%, lower than the 45% growth that TCS had. So TCS's revenues, digital revenues, are actually much larger than that of that of Infosys. TCS's digital revenues are close to $1.25 billion. For Infosys, it's at $800 million, and TCS's digital revenues are growing at 45% versus Infi, which is growing at 25%. But that said, their deal wins are improving. So deal wins at close to about $1 billion is much better than the $900 million that they had in the prior quarter, and better than the $780 million in terms of deal wins that they had in the quarter before that. So this is just some more color in terms of the numbers. But Kritika, it's back to you for more details.
Yeah, Rima, I have the exact breakup of the geography and the vertical segment. So North America in constant currency terms is up by 2%, Europe up by 2.1%, India down by 4.1%, and rest of the world up by about 5.3%. Now the figure that we were waiting for, financial services, for the first quarter in constant currency term, it's down by about 0.2%. In dollar terms, of course, it's down higher by 1.5%. But if you look at retail, if I remember correctly, last time the management had said that there is some weakness in specific quarters. This time around in constant currency terms, retail has actually grown by about 6.4%. The other areas, energy utilities, for instance, has grown by 5.3%. Manufacturing was another area that the management has hinted some caution on. That's grown by about 2.5%. And high-tech up by about 1.5%. Life sciences flattish at 0.5%. So the figure that we were waiting for, Rima, financial services down by about 0.2% on a constant currency basis, but North America is up by about 2%. So there seems to be some kind of recovery over there. But even last time around, North America was about 1.4 to 1.5, if I'm correct. Rima, I'm going through all the other figures one by one, but these are the critical numbers as far as the geography and the vertical breakup is concerned.
Okay, thank you very much for that. Rest of the world, once again, is driving growth for Infosys. We saw that even in the prior quarter. So this quarter too, it's a 5.3% growth in the rest of the world. Let's get in some more reactions. Apurva Prasad joins in now. Apurva, are you a bit disappointed with the revenue performance? And BFSI is not fired for them. Your thoughts?
No, not at all disappointed. Actually, pretty much in line number. So I was baking in 2.1% constant currency. They've delivered 2.3%. Margin is pretty much exactly in line with what we were expecting. I think there are a couple of very important positives that we must look at. The fact that they have scaled significantly their 100 million accounts, even versus TCS. If you see that number, that's very encouraging. So adding 4, taking that to 24 versus TCS, adding 2, taking that to 40. As well as the TCV of 1 billion, I think that's again a very strong positive. So I think that trajectory is eventually headed towards 1.2, 1.5 billion. These are for the large deal TCV. So I think I would actually say that this is slightly positive. Having said that, yes, you're right. BFSI has been slightly flattish, versus stronger performance from TCS.
Okay, Dipesh Mehta of SBI Cap Securities is also with us. Dipesh, how have you read Infosys Q1 numbers?
Yeah, broadly in line performance, and as earlier participants suggested, BFSI weakness, I think we need to understand more about it, how they expect BFSI to play out over next few quarters. Otherwise, deal intake as well as client movement across buckets, I think most of the parameters seems to be on improving trend, except BFSI. I think that is where we require more clarity.
Okay. Well, that is the live visuals of the management, CEO Salil Parekh, the CFO Ranga. So those are live visuals of the Infosys management getting ready to address the press at 4:30. So we will be staying glued into what they have to say in terms of the digital offering, which continues to ramp up, now contributing close to about 28.4% of their overall revenues. The deal wins are looking quite strong. There is a good improvement in the company's $100 million accounts. So the $100 million accounts in the June 2018 quarter has gone up by 4 compared to the prior quarter. So now stands at 24 versus in the March quarter, there were only $100 million accounts. So that is also a very positive internal that we should be tracking. Live visuals coming in over there. Karan, anything else that you would like to add?
No, nothing as such. So there would be no change in terms of our estimate on a constant currency basis. It would be more of a rupee depreciation led upgrade on Infosys estimate. In terms of multiple as well, we continue to give it a multiple of about 35% discount versus TCS because of the stronger growth prospect and the better margin. So nothing major to take away. I mean, it's more of an inline quarter, for Infosys. No positive surprises as such.
Attrition has inched up. So attrition now stands at annualized, stands at 23% versus 19.5%. Moshe Khatri is also with us. Moshe, on a constant currency basis, the revenue growth stands at 6% on a year-on-year basis, which is tracking the lower end of the company's guided band. Your thoughts on the revenue performance and any other internals?
So, in front of this, expectations were running fairly high post TCS, Accenture, and ISG. Net, the numbers were in line. As you stated, financial services was relatively flattish. So I would say that relative to expectations, I think numbers were kind of muted. The booking numbers look very strong, but beyond that, I think we're going to have to wait for what management has to say.
Do you expect any correction in the stock based on what you've seen right now?
As I said, I think we'll be much smarter after management's commentary.
Okay, what will be the key things that you will want to hear from the management? One, of course, is why BFSI hasn't picked up and what's ailing the financial sector. But apart from that?
How quickly the booking numbers actually get converted into revenues, and that's going to be key to kind of understand how fiscal 2019 is going to kind of look like, because obviously this is the first quarter.
Would you give financial services a longer rope? Because the company says that 40% of the large deal wins are coming in from the financial services, which means close to about $400 million. So that is a positive number. So does that give you confidence that, yes, BFSI recovery didn't take place in Q1 for Infosys, but it is indeed round the corner?
It does. That sounds good, actually, yeah.
Okay. Karan, your thoughts on how the stock could react in Monday's trade?
So I think it would slightly have a positive bias reaction given the bonus issue which they have actually announced. Yeah. But no major change in terms of our stance. We have an accumulated rating on the stock with a target price of about 14.50. It would be a slight positive reaction on the stock given the bonus issue which they've announced. That's about it.
Okay. Apurva, your thoughts on why the company may not have revised its margin guidance higher despite the rupee tailwind?
Yeah, so I think the company had earmarked a set of investments that they plan to do, and this is what the call that they're taken. So I think it's linked to that, pretty much what they're earmarked for the entire year, which is why I think margin band has been maintained. But having said that, you're looking at an accelerating trajectory from where it stands today. So I think, so we're positive on Infosys. We have a target of 1430 as of now, and then we would be keen to hear management's commentary too.
What is the valuation discount, according to you, in the fair value of Infosys and TCS, and what it should be? Do these numbers give you the sense that that valuation discount should narrow, Apurva?
So I think it's at about close to 30%, 28 to 30%. I think about 25% is based on our target multiples. 25% discount is what we're giving Infosys. So we're valuing Infosys about 18 times, about 24 times for TCS. So that's, I think that should probably hold on.
So the 25% discount should sustain based on what you've seen. Dipesh, your thoughts on the digital offering for Infosys? While it is growing quite smartly, 25% on a year-on-year basis, it still lags TCS, which saw 45% growth in their digital services. Your thoughts on that?
Yeah, so a couple of points here. So first is about digital definition across companies varies. So one has to keep that in mind. If one looks at quarter on quarter, I think there is no material difference between both the companies in terms of digital revenue growth. So I think I agree about the 40% of TCS versus 25% for Infosys, but I think one has to also keep in mind about the definition difference and those factors.
I think the reason the profits may have missed expectation is on account of the company counting for the sale or the impairment loss that they may have done on account of the assets that they're looking to sell. So we'll try and get more color on that for the reason for the profit miss. But Moshe, any more color on the internals?
At this point, nothing new. Again, as I said, I think the booking numbers are pretty encouraging, but it'll be good to get some more details on what happened in terms of why the profits came in a bit below expectations.
Okay. I'm also very keen to know whether these investments that the company is making into the digital capabilities, sales coverage, local hiring, reskilling continues beyond FY19. So yes, it's impacting their FY19 margins, but if it continues into FY20 and 21 thereafter, because these investments seem quite core to the company and therefore could be ongoing as well. So that is one clarity that we will also await from the management when they get ready to address. So Moshe, according to you, what is the appropriate valuation that Infosys should trade at? And the stock has already seen about a 25% run-up since the start of the year.
It's all about where fiscal 2019 and 20 are headed to. Are we at that inflection point that TCS is at? Is it not? The PE multiple discount is a function of sustainability and consistency. And if the company starts hitting that consistency, I think you'll get that PE multiple discount kind of closing. So this is kind of, a lot of it really depends on how this year kind of pans out.
What's your own expectation of the dollar revenue and constant currency growth that Infosys is likely to post in FY19?
We have 8% constant currency growth, and we have a neutral rating on the stock.
Okay, so you expect an acceleration because in Q1, their constant currency growth was only 6% year on year.
We do. And again, if you listen to some of the commentary out there, it's not only TCS, it's also ISG that's talking about a recovery in outsourcing deals. They've also raised their expectations for outsourcing growth for the year by about 200 basis points. So we should see a rising tide lifting a lot of the fortunes of the vendors in the space.
Okay, so the net profit, it was impacted by 270 crore on account of a reduction in the fair value of assets held for sale. So that is the reason why their profits went down by 2.1%. There was an impact of 270 crore. The company's, just to read out some more color, the company has said during the 3 months ending June on remeasurement, including the consideration of progress in negotiations on offers from prospective buyers for Panaya, the company has recorded a reduction in the fair value of disposable group held for sale amounting to 270 crores with respect to Panaya. Consequently, the profit has been impacted by 270 crore. Purva, you want to come in on the kind of value Infosys may get for the Panaya sale? They already seem to have lowered the valuation by 270 crores, going by what we can read right now.
It was a 118 crore hit, which they had in the previous quarter. So for the hit, we need to understand. So that's something again which is earmarked for sale this year. But that's another thing that we'd want to hear more from the management. This is a follow-on on the 118 crore write-down which was taken last quarter.
Okay, but can it be an overhang? Because it appears that from the negotiations and offers from prospective buyers for Panaya. Not really. Okay. Karan, you want to comment on this, on the Panaya sale?
No, I don't think it will be a major impact as such, on the overall, given the size of overall Infosys P&L.
Your own expectations, Karan, on the constant currency growth that Infosys is likely to see in FY19 and FY20 and when it can catch up to TCS?
So we are expecting about 7.5% kind of constant currency growth in FY19, and we are expecting about 8.5% kind of growth in FY20. The catch-up will happen probably only in FY21, FY22. That's when they perform and get about 10% kind of growth. For the next 2 years, we've built in growth estimates of close to about 8.5% CAGR on constant currency for Infosys.
Okay, so Moshe expects an 8% growth by Infosys. Karan expects a 7.5% revenue growth. Apurva, where do you stand?
About 8.3% CAGR.
8.3%. In constant currency, right?
No, this is dollar revenue. Constant currency for this year, 7.2%.
Okay. So what gives you the confidence about acceleration in growth from here on, considering the second half of the year is typically seasonally weak?
Yes, I mean, so you have to look at a YY perspective. That's what this guidance and this number is really talking about. So there's obviously some bit of base impact coming through. Also, the bookings number is, on an upward trajectory. And I think a lot of these metrics are a lot better than what it was a few quarters back. So I think all of this will culminate into a slight acceleration to where it is today.
Okay, so just in case our viewers have tuned in right now, once again, let me just summarize the numbers from Infosys Q1. It seems largely in line with expectations, though according to the CNBC TV18 poll, there is a very minor miss on the revenue front. So dollar revenue growth has come in at 0.9%. On a constant currency basis, it's a growth of 2.3%. Margins in line with expectation, but profits have come in lower than street expectations on account of a 270 crore hit that the company has taken on account through the progress that it's made on the sale of Anaya. So that is impacting the company's profitability. On their FY19 guidance, the company continues to maintain its constant currency guidance of 6 to 8% and their margin guidance of 22 to 24%. What I don't have right now is what they've done with the dollar guidance. Do any of you gentlemen have their FY19 dollar revenue guidance? Apurva, do you have the dollar revenue guidance?
No, I don't have that.
Karan?
No, I don't know. Fine.
Okay, and Moshe, would you by any chance have the dollar revenue guidance?
I don't have it either.
All right, so we'll wait for that in the management as well. Right now, FY19 revenue as well as margin guidance has been maintained by Infosys, which is in line with expectations. The two big positives in the number, a couple of positives in the number. One, their order bookings continue to track higher. This quarter crossing $1 billion, and 40% of that is coming through the BFSI vertical, which gives you perhaps visibility of BFSI improving in the coming quarters. So that is a big positive. Their $100 million clients have gone up by 4 on a quarter-on-quarter basis, now 24 versus about 20 in the prior quarter. So that also is a big positive. They continue to utilize their bench very well. So utilization is at an all-time high at 85.7%. So that also is a margin kicker for the company. Digital continues to track well. It's about a 25-26% growth on a year-on-year basis. It's only lower than what its peer TCS has reported. Retail has clocked in a very strong turnaround. The disappointment this time around is perhaps from BFSI, which has seen a growth of only 0.1% on a constant currency basis. But again, over there, if the deal bookings are strong, which it seems close to about $400 million at least in Q1, then perhaps you have some visibility going ahead. Attrition could also be a bit of a negative. The consolidated attrition has inched up quite a bit and now crossing the 20 mark on a quarter-on-quarter basis. In moments from now, we'll have the management. Okay,